Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844-WE-LEND-FOR-YOU. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and every week I bring you guys important information about all things real estate and mortgage. Now, as I'm sure you have all been paying attention, interest rates have been up, they've been down, they've been up, they've been down. And what is sparking all of this crazy roller coaster? Well, we're going to talk about that today. We're going to talk about what I'm hearing and what I'm watching and what I'm reading and what I feel that we're going to see in the coming months and all the way into 2024. So that is what the show is going to be about today. What sparked the crazy increase in interest rates last week? Why are we all of a sudden seeing interest rates improve a bit right now this week? And what is going to happen next week? It is very, very hard to say, but that is what Mortgage Mom Radio is all about today. And I do want all of you guys to let me know that you are there, that you are watching. Say hi. I can see my dad's jumped on. He says, hi, guys. And I can see Ann jumps in and she says, can you see me? Ann, I can see your comment. Thank you so much for joining and being part of the show. I love that. For all of you guys out there that are looking for property in Orange County, Ann Harris is an amazing real estate agent. We have worked together for I don't even know how many years now, but I'm going to say at least probably 15, probably more. But Ann is fabulous. So if you guys ever need a number for a real estate agent in the Orange County area, please feel free to reach out. I would love to get you over to her. Nicholas jumps on. He says, hello. Nora says, hi, everyone. And Carrie says, hi, Debbie. So again, I want to remind everybody that this is an interactive show. I do want you to ask your questions. I will answer them for you. You know, the real estate topics right now, the inflation, the stock market, everything right now is very temperamental. It's changing daily. What we think is going to happen next week doesn't always happen. You guys can see I've got my boyfriend Buck here in the studio with me. So he says hi. Say hi, Buck. But that's what's happening. So Heather jumps on. She says hi, everyone. And so let's get into this topic. Let's talk about this rate roller coaster and exactly why are we feeling it? What is happening? What is being said? What sparked interest rates to rise last week? And what is now sparking interest rates to actually plummet this week, and then what is going to happen next week. It is so important that you do understand the market. If you are out there and you are looking at homes and you are making offers, you are writing, contracts, you're hoping to get an offer accepted, it is very, very important that you and your lender are very close friends, that you are checking in every couple of days to see if interest rates are still the same, have interest rates changed. Mind you, I ran a payment a little bit earlier today for a new client that wants to be pre-approved. And the monthly payment at a 6.5% interest rate for their sales price and their down payment was going to be $3,900 a month. I ran the payment at 7% interest rate, and that payment was $4,110. So the interest rate will change the monthly payment. It will change how much that you qualify for, and it will change whether or not you feel that the property is affordable for you. So the last thing that you want to do is, talk to your loan officer, get yourself pre-approved. A couple of months go by, you've been looking at homes, you've been running numbers, you decide that this is going to work, this is for you, you write the offer, you fall in love, you get your offer accepted, you call your lender back, and you find out that interest rates are totally different than they were when you first started. That monthly payment is now higher, and it's just not doable for you any longer. So it is really, really important that you have that close relationship with your loan officer and that you are keeping tallies on the market and exactly what is happening. So with that said, let's talk about this roller coaster. So what happened? Okay. And I've got some articles and some notes, and, I want to make sure that I'm bringing you guys the information accurately. So this came out, this was something that came out from the company that I follow interest rates with, and they're explaining exactly what is happening, in the market, and it's keeping me on my toes as a loan officer. And this was an article that they sent out last Friday. Now remember, today's Wednesday, and if you are watching or you're listening to this show by radio on Saturday, you are a couple of days behind. But this was last Friday, right before Memorial Weekend, and they said, debt ceiling fallout. As of this writing, there has been no resolution to the debt ceiling debate, where Congress and the White House agree on a plan to lift our spending limit. In the absence of lifting our debt ceiling, there is a risk of debt default and or a credit downgrade. Any of those scenarios would be very disruptive to the financial markets and our overall economy. We are already seeing upward pressure on rates due to the lack of resolution. The 1-month Treasury bill spiked to 5.6%, up from 4% just a few weeks ago. This dramatic spike has also placed upward pressure on the 10-year yield and mortgage rates. The former hit 2-month highs on Thursday. So I'm on here a couple of weeks ago, and I'm doing this show, and I'm telling you guys that we're at the lowest levels that we've been at truly since probably about October of 2022. And now all of a sudden, a week and a half, 2 weeks later, and here we are, we're at the high, we're back at high interest rates again. Now, the interest rates last week, the week before Memorial, they actually spiked because most people, and we've done shows all about the Federal Reserve and did they hike the rate? Did they not? Are they going to? What do we think? What does that mean to rates? So at the last meeting, a lot of analysts felt that they were not going to increase the Federal Reserve prime rate at the upcoming meeting, which will be in exactly 2 weeks from today. So June the 13th and 14th is the next set of meeting for the Federal Reserve. So as of last week, though, with all of the numbers that come out, jobs reports and inflation and everything else, they started feeling like the Federal Reserve is going to hike that interest rate again. So as we had talked about probably about a month back when I did the show about the Federal Reserve and the prime rate going up, I did tell you that everything is about anticipation. And we talked about that during that show. What are we all anticipating is going to happen with the next meeting? So if we anticipate that they are not going to move that Federal Reserve prime rate, then we're going to keep interest rates very steady. If we feel that they are going to increase that interest rate, then we're going to see the interest rates start to move because they are going to build in that quarter point that they're assuming is going to happen prior to the date of the announcement, so that again, those rate sheets already have that quarter point built into them. So at the time of the last meeting, the majority of analysts were actually feeling like that was it, that we were done. That was the last rate hike we were going to have. I don't know if you guys remember, but I told you I didn't think that we were done. I thought we were going to see another quarter point hit come June, middle of June. So now all of a sudden, as of last week, after a bunch of the reports came out and things are looking good and inflation is cooling off, but still not where they want it to be, they started getting that feeling that we're going to see that quarter point rate hike. Then many of the members of the Federal Reserve have started to come out and have started to make statements and, give interviews and talk about how they feel that another quarter point rate hike is something that should take place in 2 weeks from now. So all of a sudden last week, we started to see those interest rates really go up quite a bit because they've got to get that quarter point built into that rate sheet. So that is what exactly happened last week. Now, we've also got this debt ceiling thing that I just talked about. And what the heck is going on with this debt ceiling and how does that affect us? Well, it's very big. If they don't come out with a way to increase that debt ceiling, we're going to see a lot of reaction from that happening. We're going to see, the United States, we've got, if not the strongest, one of the strongest currencies. We're held to a top standard. We're going to be downgraded to a lower standard. We're going to see fallout. We're going to see stock markets fall. We're going to see them drop significantly. I have read some articles that say that, if they don't come to a resolution on this debt ceiling and increasing it, that we could see $10 trillion worth of net worth of homeowners throughout the United States just disappear from a stock market plummet of 45%. Now, that's not to say that that's actually what's going to happen, but this is what analysts are all trying to figure out. What if everything that happens in the market, with the stock market, with, your cryptocurrencies, with the mortgage interest rates, everything is based on what if and assumptions, right? So now with this debt ceiling, they came out over the weekend on Saturday. There was an announcement that said that they came to an agreement, and now they're sending it to the GOP to make decisions, right, for everybody to vote on. So with that, now all of a sudden, we're starting to see interest rates once again this week improve. So it has been an absolute roller coaster, and it is very difficult to make sure that we're keeping our finger on it. And are they up? Are they down? Where is the average interest rate? But it is very, very important if you are somebody thinking about refinancing, if you are purchasing a property, to have a good hold, a good grip on what is happening. Read the news, read the financial piece of the news, even if that's not something that you would typically do, to make sure that you are keeping, up to date with what is going on in that mortgage world, because those interest rates will impact you. It is a very, very big deal for somebody who is trying to get new financing. It does make a difference in what that monthly payment is, which means that it makes a difference in how much you can or cannot qualify for. So we're going to dive a little bit deeper. I'm going to read some statements that came out of some of the members of the Fed, and then we are going to decide, what do we think is going to happen, right? Because that is what's so fun about this show. So once again, I invite all of you. This is an interactive show. Please put your questions into the feed, put them into the comments. I'm going to read them out loud. I'm going to answer them for you. I want to know what you're thinking. I want your thoughts. I want to know, what are your concerns? What exactly is it that you feel, what's holding you back from what it might be that you're trying to do, whether that be purchase or whether that be refinance? So let's start the conversation. We're going to take a quick 2-minute break. I'm going to run 2 commercials, so don't go anywhere. We'll be right back.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 0941504, Florida, LO 76508, Georgia 69178, Idaho, MLO 208-023-7926, Illinois 031-005-8339, Missouri, North Carolina, I-210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926.
She's a mortgage mom.
Mortgage Mom here. Hey, if you're a homeowner, you've probably got some equity in your home. Do you have debt that you need to get rid of? Well, give us a call. Let us take you through that blended rate calculator that I always talk about. Let's determine if it makes sense for you or if you should keep what you have. How do you do that? Well, book your phone consultation. Go to our website at mortgagemomradio.com and you can book your call right there. Once again, that's mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Institutions and NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom.
Mortgage Mom here. Have you been thinking about buying your first home and you just don't know where to get started? We'll book a phone consultation with either one of my loan officers or even me. How do you do that? Well, go to our website, go to mortgagemomradio.com. Right there, you'll see a book phone consultation and get on the books. Talk with us. Let's get you started from beginning to end. We'll walk you through that process. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are talking about the mortgage rate roller coaster. Last week, interest rates definitely shot up, and they shot up pretty quickly. Now, all of a sudden, this week, Tuesday, yesterday, and today, Wednesday, we're seeing some pretty significant improvements. Why in the world is all of that going on? Why are we going up? Why are we coming down? So I did start the show off and giving you guys some good information about what is happening with the markets, what are people reading, what announcements are happening that are changing, what is going on with mortgage rates. And so we're just going to continue to talk about that today to get you guys a good understanding of where things are at right now. Now, I mentioned before the commercial break that there were some of the Federal Reserve chair members who were starting to make statements, which is what kind of set off the influx of interest rate increases last week, where they're saying, they don't see any reason why they shouldn't continue to increase the prime rate, which is meaning in a couple of weeks from now, in the middle of June, that we very well may see an increase in that Federal Reserve prime rate by another 0.25%. So there was an article that was on Reuters. It came out May the 31st. So I don't know if that's today or yesterday. I don't know what my date is. But I did want to read this to you guys because this is kind of what I'm talking about as far as what we're seeing, and what is making the assumptions grow and then triggering the market, right? Whether it's improving or whether it's getting worse. So May 31st, Federal Reserve Bank of Cleveland President Loretta Mester says no compelling reason to wait to implement another interest rate hike. The Financial Times reported on Wednesday. I don't really see a compelling reason to pause, Mester told Financial Times in an interview. I would see more of a compelling case for bringing the rates up and then holding for a while until you get less uncertain about where the economy is going. Mester's comments come after some Fed policymakers hinted that they may support a pause in raising rates in June to assess the impact of the U.S. Central Bank's policy tightening so far. 10 straight interest rate hikes by the Fed have brought the U.S. policy rate to a 5 to 5.25% range. Mester also said the debt ceiling deal brokered by President Joe Biden and House Speaker Kevin McCarthy could relieve a big piece of uncertainty about the economy. So as I just mentioned about how that debt ceiling is going to make a huge impact, they don't come to some sort of an agreement here real soon. The legislation passed an important hurdle late on Tuesday, advancing to the full House of Representatives for debate and an expected vote on Wednesday. So we're hoping that we're going to see that debt ceiling come to terms here very, very shortly. So again, there's just one of the policymakers that are saying, I actually would vote for another 0.25% rate hike rather than pausing. Nobody is talking cuts yet. Now, many of the articles that I have read are talking about how they don't believe that we are going to see any rate cuts whatsoever in 2023. So if they raise another quarter here in June, which I feel we're going to see, and then let's say we get to the next meeting in August and they hold, they're going to probably most likely hold through the rest of the remaining 2023. So we may not see any more hikes, but we're not going to see any cuts. Many of these articles that I'm reading are talking about them doing some bigger cuts come 2024. Now, that may not mean the beginning of 2024. That could mean middle of 24. That could mean third quarter of 2024. But there are some analysts who are saying that they feel we're going to see 7 rate cuts in the year of 2024. Now, that would be absolutely fabulous, and I would be super excited about that. 7, I think, is probably a little overzealous. I don't know that we'll see that many, but the bottom line is that we're almost there. So there was another article that I did read, and I don't know if I can even find it in my mess right now. Let's see if I can find it. This one was really good because I think it gives us an idea and an understanding of where we are globally with inflation, which I think is our key issue here. Inflation, right? They've got to try to get that inflation down. As you've been hearing them talk over and over again, they're trying to get the inflation to come back down to a 2% level. They're raising interest rates to try to tighten, to get people to stop spending as much, stop increasing rents, stop increasing costs, right? They're trying to bring things down. So in this article that I read, it said signs that global inflation is cooling, disappointing growth out of China, and falling stocks are all giving the bond markets a boost as the market awaits a signed debt deal from Congress. So again, I talked about last week what sparked us. Well, that was, we think that the Fed's going to raise the rate another quarter point. They have to hurry up, get that built into those rate sheets. And then what is actually giving us a little bit of relief in mortgage rates this week? Well, here it is. Signs the global inflation is cooling. Disappointing growth out of China and falling stocks are all giving the bond markets a boost as the markets await a signed debt deal from Congress. After yesterday's headlines that inflation eased in Spain, and now this was yesterday, Tuesday, today is Wednesday, okay? Today is May the 31st, by the way, I finally figured that one out. So yesterday, May 30th, okay, after yesterday's headlines that inflation eased in Spain, this morning, Germany is reporting that inflation dipped to its lowest level in more than a year, while India also said inflation was cooling. The Fed's Bauman said the housing market rebound could impact the inflation fight, but she also noted that the decline in rents should appear in future inflation prints. Mortgage bonds are higher while the 10-year yield has fallen to 3.65%. Stock futures are lower with the S&P 500 squeaking out a gain for the month up until yesterday as the sell in May and go away didn't materialize. The JOLTS reported, now JOLTS has to do with the jobs report, showed that there were 10.10 million jobs available on the last day of April, up from 9.745 million in February. Technically, the Fannie Mae 30-year 5.5% coupon has rised above resistance 1 at 99.5 and sets its sights on resistance 2 at 100. This appears to be a classic reversal higher on the heels of the debt ceiling optimism, but a lot still has to go right before we can get overly bullish. And remember, the Treasury coffers are depleted, and it may have to raise cash to fund the debt deal by offering more government securities. And in the same time, the Fed is not buying bonds and banks possibly buying less, if at all. Continue to lock where you can, but for those files closing outside of a 30-day window, consider floating. Watch closely with us as we wait to see if bonds can bust through nearby technical hurdles. So what they're saying is basically, we hit this high again last week, and then now all of a sudden we've got the debt deal happening. It's driving stocks down. People lost a lot in the stock market yesterday. It was not doing very well. This is pushing the bond market to a better place. This is bringing our interest rates down. We've actually broken through one of the barriers. They set their barriers at certain levels where there's resistance. We've actually broken through one of those resistance points, which is great. That means that most of the time, once it breaks through that resistance, then that's going to be our new kind of plateau mark. They're hoping to see us break through the next plateau if the debt ceiling comes, they get that under control and they do agree to lift that ceiling and we come to resolution. So we very, very well may have some interest rates start to get better here now. We might start to see interest rates come down a bit, which is very good. But once again, it is a massive roller coaster. That is what we're going through. And it's because we're getting pulled in so many different directions. Fed wants to hike, the rates. The government can't come to a conclusion on the debt ceiling. Inflation is coming down, so there's all of these pieces that are pulling us, and we're going to see a little bit of volatility here probably over the next couple of months. So the most important thing that I can tell you is, again, if you are out looking and shopping for a home loan, whether you're looking to purchase a property or whether you're looking to refinance your home, make sure that you are staying very, very close with your loan officer, that you guys are talking very, very often. If you have a pre-approval letter and you're out looking at homes, my recommendation would be to check in at least once every 3 or 4 days, just to make sure that interest rates are still at the number that they were when you guys were doing the pre-approval, that you're still qualified for the same monthly payment, that means the same in sales price as it did before. So very, very important for you. If you've been thinking about doing a refinance, you want to make sure that you're staying nice and tight with your loan officer as well. Get that application started, get it in the works, and make sure you guys are actually talking daily to decide when the right time is to pull the trigger to actually lock the rate. So again, very volatile, very roller coaster going on right now, but good news, right? I think that the good news is that we're seeing the inflation come down. We're seeing the economy. It is doing well enough that the Fed is feeling like they could hike those rates again. Not that we all want to see that happen, but we're doing well enough to sustain it, which is only going to help us bring that inflation down even further. So we are going to take a break. But when I get back, I do want to talk to you about another article. And I've mentioned this before, but we're going to talk about the easiest way for you to actually fight inflation. So don't go anywhere. Stay tuned. We'll be right back.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, have you been thinking about doing some home improvements or renovations to your home? Well, property values are up and interest rates are down. Why not explore whether that's something that you can do? How do you do that? Well, get on the books. Get a phone consultation with us. What do? Go to mortgagemomradio.com and book your appointment right there. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844-WE-LEND-FOR-YOU. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and I'm helping you guys stay up to date with everything that's happening in the global economy with mortgage rates, everything, all things real estate and mortgage. So I did mention right before break that we were going to talk about what is the best way that you can possibly fight inflation. And I have talked about this in previous episodes, but I haven't talked about it in a while. And then I saw this article, again, a really great article, and I wanted to make sure that I brought this to your attention. And I did a new buyer consultation with somebody, a phone consultation, and they want to get pre-approved to purchase a home. And they were actually very concerned because they thought if they purchase a property and they get their interest rate, then all of a sudden if interest rates go up, that they would get, their monthly payment could change. Remember, guys, it is so important for you to get into a fixed interest rate. It truly is. So one of their very best ways you could possibly fight inflation, are you ready? Here's the article. Owning a home helps protect against inflation. You're probably feeling the impact of high inflation every day as prices have gone up on groceries, gas, and more. If you're a renter, you're likely experiencing it a lot as your rent continues to rise. Between all of those elevated costs and uncertainty about potential recession, you may be wondering if it still makes sense to buy a home today. The short answer is it does. Here's why. Not only will buying today help you begin to build equity, a fixed rate mortgage can stabilize your monthly housing costs, unlike rents, which tend to rise with time. A fixed rate mortgage payment is predictable over the life of the mortgage, typically 15 or 30 years. And when the cost of most everything else is rising, keeping your housing payment stable is especially important. So the alternative, and I could go through all of this with you guys, but the alternative to homeownership is renting, and rents tend to move alongside of inflation, blah, 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 blah. A fixed rate mortgage allows you to protect yourself from future rent hikes. With inflation still high, when your rental agreement comes up for renewal, your property manager may decide to increase your payments to offset the impact of inflation. Maybe that's why, according to Build something staging, I don't know, to a recent survey, 73% of property managers plan to raise rent over the next 2 years. Having your largest monthly expense remain stable in a time of economic uncertainty is a major perk of homeownership. If you continue to rent, you don't have the same benefit and aren't as protected from the rising costs. Bottom line, a stable housing payment is especially important in times of high inflation. Connect with a real estate agent so you can learn more and start your journey to homeownership today. So that was another, article that I pulled, and we've talked about this in the past. And I've talked about how there are a lot of potential home buyers that are sitting on the fence right now, and they're waiting. And they're waiting because they feel that either home prices are going to drop or interest rates are going to come down. And so they're waiting to pull the trigger to get out there and to start looking. Everybody expected that property values were going to plummet with, interest rates going up. Well, guess what? They haven't plummeted. They've actually stayed very much the same. There's certain areas where we've actually seen them still continuing to increase. There's areas where we've seen a slight decline of 2%. Nothing that's been all that spectacular. There's been no crazy fallout of housing prices, even though interest rates have gone up. So anybody that did purchase a home has kept their equity. Anybody that has purchased a home got into an interest rate either at where the market is today or lower, and they're building equity in that home, and they've got a stable monthly payment, and they know exactly where they live, and they know where they're going to remain living. They've got that stability. Nobody can tell them that they need to move. Nobody's going to hike the monthly payment on them. A 30-year fixed rate is very important. Now, we talked a little bit earlier in the show. Some analysts are saying that they think that we're going to start to see some, like quite a few, up to as many as 7 rate cuts in 2024. Now, I don't know that we'll see that many, but it's inevitable. Something does have to give. We do need to see interest rates come down eventually, even if that is not in 24, but it's in 25. So what would be the recommendation that I would give you as the mortgage mom? I would tell you, it is so important to own a home. It is so important to get into a monthly payment that you can afford. So make sure that whatever you're buying, that you can afford that monthly payment, and that you can afford that monthly payment for at least the next couple of years. Now, if interest rates fall next year, so we refinance you, we drop your mortgage rate, we drop your monthly payment, we make things more affordable for you, we give you guys a little bit of extra breathing room, that's all fantastic. Maybe that happens in 2 years from now. Maybe that happens in 3 years from now. It is inevitable. Interest rates are going to come back down eventually. Property values have not dropped. Why have they not dropped? There are not enough homes on the market for sale. There are not enough sellers selling. Why are they not selling? Well, they're not selling because they've got a 3% interest rate or a 2.5% or a 4% interest rate. And if they were to sell and go buy something else, their monthly payment would actually increase. So you've got a lot of people that are sitting right now not putting their homes on the market, which is keeping the market values high. So when the interest rates do drop, what is going to happen? Interest rates come down, making that $700,000, $800,000 property more affordable. So you have a bunch of renters come to market. You have a bunch of sellers come to market. The sellers have wanted to sell. They have been wanting to move. They've been wanting to go through the normal transition that happens after, 3, 4, 5 years. Most people stay in a home 3, 4, 5 years, maybe 7. They turn around, they sell, they go buy something bigger. It's natural evolution. Maybe they're downsizing. Their kids have moved out, gone on to college. They don't need as big of a house. But that normal evolution is being paused right now. It's being put on hold. Not enough people are selling. So when interest rates do come down, you are going to see a lot more inventory, but you are going to also see a lot more buyers. So we're going to be stable. We're going to be stable in transactions. We're going to be stable with just as many buyers as there are. There's going to be listings. I still don't think that we're going to see a massive overproduction of listings. We're not going to be flooded in listings to the point that property values will come down, but interest rates will, and that is going to get the market buzzing and booming and going crazy, and equity starting again, and property values going up again. And so it truly, if it's your time to buy, you should be thinking about buying. You should be thinking about securing yourself a property, securing yourself a monthly payment, securing the fact that nobody can tell you to move, that you don't have to leave, that you've got your tax deductions. It's all very important. There is absolutely no reason to wait. And if you've been thinking about buying a home, now would be a fabulous time for you to do that, especially because we are already halfway through 2023. They started raising our rates in 2022. Believe it or not, it probably doesn't really feel like it because life moves so fast, but we have already gone through about a year and a half of rate hike, right? And so we're finally coming, we're slowing down. I do think we're going to see a rate hike in June. I think that is probably the last one. If you ask for the Mortgage Mom's opinion, I don't have a crystal ball. Nobody does. But if I was to give it my best guess, I would say it's our last rate hike. Then we're going to hold. They're not going to drop them. They're not going to cut them back. We're going to hold. And then we're going to hold for a while. And when they start to cut them back, then they will start to cut them back. Every meeting or every couple of meetings, they'll do another cutback. They are going to make sure they get our inflation back to where it needs to be. But believe me when I tell you this, when those interest rates start to come down, the market is going to start to buzz. It is going to buzz, and we're going to be back with people doing mortgage applications, buying homes, bidding wars. All of it is going to happen. This is a fantastic time right now when there's, you have the opportunity to get into a property. You can always drop that monthly payment and make it more affordable later, or get yourself into something that you can afford right now. Know that the monthly payment that you make could be covered by a tenant. When the interest rates do come down further, rent the place out that you have, refinance it for a better interest rate, make yourself some cash flow on that property, and then go buy yourself another property and go buy yourself, your next stepping stone. So lots and lots of opportunity right now in this market, a lot of opportunity that people aren't seeing, that they're not capitalizing on, a lot of fear that's holding people back. But guys, the fallout didn't happen. It hasn't happened. Property values have not plummeted. And as soon as they stop moving that rate, we're going to see more heads perk up. And as soon as they start to cut that rate, it's going to be an all-out frenzy, in my opinion. Again, this is the Mortgage Mom's opinion. This is what I foresee for our future. I think that as soon as we see a lot of people excited again, we're going to start to see property values increasing. We're going to see overbidding. We're going to see everything that we saw in 2020 and 2021. So we're almost there. Take your hat off, start exploring, find out what you can do, see what your opportunities are to purchase. And if you can execute and get yourself into a home, it's a great time to do that. Now, homeowners, I haven't talked to you guys a lot because honestly, refinances are very slow right now. A lot of you have very, very good interest rates on your homes. You don't want to refinance right now to pull out the cash to pay off the debt that you have accumulated. The majority of the people that are looking to do a refinance, it's not because they just want to refinance their mortgage balance for a better rate. It's because they've accumulated debt that they need to figure out how to pay off, and they've got equity in their home. So the majority of people looking for a refinance have accumulated debt, and you've actually probably accumulated quite a bit of debt because now that the prime rate has changed, the interest rates on your credit cards have changed, you're paying a lot more interest every month. That is making your balance go bigger every month, even if you're making a minimum payment. And so we have a lot of clients that are inquiring about a refinance, but choosing not to pull the trigger and move forward because their mortgage payment would go up. But the one thing that they're stopping and they're not thinking about is, number one, you can always refinance again when interest rates do come back down. But number two, have you actually sat down and written down on a piece of paper what all of those monthly debts are that you have and how much money that they are costing you per month, plus your mortgage? You have to look at the overall complete debt that you have, right? So we did a refinance application last week. It's in process right now with our office. And the client is going to lose an interest rate that they currently have at 3% on their mortgage. They're going to get into a new mortgage that's actually going to be at about 7.25% based on, their personal scenario, their credit score, the loan to value on the home, how much cash that they're pulling out, right? So think about that, 7.25%, from 3% to 7.25%. Yet when we actually sat down and we wrote out all of their monthly debts, the credit card bills, everything that they had that they were going to be able to pay off, and what those minimum payments were, even with their mortgage payment going up, they are still saving themselves monthly out of pocket an extra $1,500 a month. Now, every single person is going to have a different story. Every single person is going to have a different piece of math that's going to go along with their scenario. So we really do have to talk to you. I just want you guys to get it out of your mind. I can't refinance right now because I'm going to lose my rate. But how much is, that student loan costing you? How much is that personal loan costing you? How much is that credit card minimum payment costing you? How much interest are you paying on that credit card because you can't get it paid off? How much is that car loan costing you? So many of our homeowners today have so much equity in their home that you've got the equity that you could cash out and you could pay those debts off. So if you could get rid of those debts, and you could, even if your mortgage payment went up, you could still save yourself monthly in the budget $1,000, $2,000, $3,000 a month, it very well may be worth looking into. The other thing to keep in mind is that many of you, because you didn't want to touch the interest rate that you had on your mortgage, you chose to instead take yourself an equity line of credit. Those equity lines of credit have gone up significantly. Your minimum monthly payment is up, the interest that you're paying on the money that you borrowed is up, and it very well may be a very good time to get those consolidated as well. So talking to my homeowners out there, I know it is so hard to think about possibly losing that super low interest rate, but if you have dug yourself a hole and you've gotten yourself into debt, that 6 or 7% on a new mortgage interest rate is a whole lot lower than those 35 and 40% interest rates that are right now on those credit cards. Heather jumped in and says, I think it's an excellent time to get qualified and see where you are purchase power wise. See if you are where you would want to purchase, or do you need to make some changes to get you there? That way, when you are ready to buy, you can jump on in and not be waiting for an approval. Approvals can last a long time. And I agree with you, Heather, as long as we keep up to date with updating credit and updating, pay stubs, as time rolls on, it just keeps that pre-approval active. So that's great piece. Giselle says, can you share the articles or websites you referred to today? I sure can. So one of the articles I talked about with the Owning a Home Helps Protect Against Inflation. This actually came out of, it's called Keeping Current Matters, and that is keepingcurrentmatters.com. So you can check that out. The other is from Tabrasa. Tabrasa is the company. It's also known as Mortgage Market Guide. So you can look them up as well. They talked all about the debt ceiling that I read to you guys. The other that I mentioned was Reuters. So that is where I pulled the majority. I'm not looking at Fox News. I'm not looking at New York Times. I'm looking at the key places that we're getting our financial data from. So Giselle, I hope that helps. tips. Giselle says, love this show. Thank you, Giselle. I sure do appreciate that. Heather said, even if you're not ready in the near future, you should still see where you are so you are prepared for when you are. I agree. There's never, ever, ever too early to get started. Giselle says, that's exactly what I tell my clients. I work as a realtor. What tips do you have to share with those who are skeptical about talking to a lender? So Giselle, honestly, I've got to be honest with you, there are a lot of lenders or loan officers that you get them on the phone and they're kind of cheesy and they remind you of, the used car sales guy. And, I'm sure that there's some really cool, nice used car sales guys, but that's just, a stigma, right? That they've gotten. They can be a little sleazy, a little pushy, right? There's a lot of loan officers that don't take their time. They don't educate and they don't talk to the clients. They just say, the person calls and says, well, I'd like to see if I can get pre-approved. Okay, great. Here, fill out this application. They run all the numbers. They send them back the numbers and they say, okay, look at, yay, woohoo, you're pre-approved. You can qualify for $500,000. Your payment will be $4,500 a month. And let me know once you found a property. But they're not actually educating the client. They're not talking to them. They're not asking them the important questions before they even get started. I just did that a consultation on the phone today where my questions were, okay, so tell me, you want to get pre-approved. That's fantastic. But let's start here. You've been window shopping. I guarantee you're looking at realtor.com or Redfin or wherever. What are you seeing? What price range do you need to be in to find what you'd be happy buying? Because we need to have kind of an idea where we're starting. The client says, well, $500,000. Really, I can't find anything for less than $500,000. I said, okay. I said, is that a single family or is that a condo? I've got to figure out as the loan officer, am I going to include some HOA dues when I'm talking to them about qualifying and monthly payments? No, I think we can find a single family in that price for the area that we're looking in. I said, okay, great. So now talk to me about down payment. Do you have down payment saved? Do you need down payment assistance? What is your goal? What do you have available? Well, we've got $20,000 available. I said, okay, so we're going to be looking realistically at an FHA loan where we can do 3.5% down. You're going to be short, closing costs. So you're going to need to talk to your real estate agent about whether they feel that we're in a market that they could try to negotiate to get some closing cost credits for you. Said, but let's assume that they can, and you've got your 20 grand and that's enough to get you into your 500. So now what kind of monthly payment were you looking for? Well, we'd really like to keep our payment about $3,500. And I said, okay, great. Let me run an FHA payment for you. So I run it and the monthly payment was about $39.50 a month based on today's interest rates. And I said, I don't want you to do a loan application with me. I do not want to pull your credit report. I don't want to bring you down that path if you don't feel that $39.50 versus the $3,500 that you told me was your comfort level is something that you could afford. It is very, very important right now for people to know that they can afford what they are buying. They've got to figure that they are going to be in that payment for a very long time. And maybe we all get lucky, which we hope we do and we expect to, with interest rates coming down and a refinance down the road, but we can't hang our hats on that. We can't expect that that's going to happen and think that we've got enough in savings that we can, swing it for a year. And then what happens at the year when the interest rates didn't come down? So it's very, very important to make sure that you're talking to them, that you're educating them, that you're referring them to a loan officer that is giving them the education that they need. Now, this client, after we talked more and more and more, they felt that with the taxes that they get to write off, the property taxes, the mortgage insurance, the property interest, how it's going to help them in their income tax returns, owning a property, getting the equity, hopeful of future possibility of doing a refinance. They felt that going to that next higher level in the monthly payment was very doable for them. And so we decided to move forward and start the loan application. So again, it's about education. It's about taking the time. And there's just, unfortunately, there's not a lot of loan officers that do that. Giselle, if you're a real estate agent, we would absolutely love it if you created a relationship with us and with our team, because this is how we take care of every single client that we work with. Every single person that calls us gets the same treatment, the same phone consultation. And if they're not ready, then we make sure that we give them the path, save this much, work on your credit. These are the things you should pay off. If you do this, it'll bring your credit score up. We're giving them their path to homeownership rather than just saying, no, sorry, try again later. So I hope that answered that question. Heather jumped on and said, I have a client we are working with now that it was better for them to refinance the whole loan into one new loan. It's saving them $900 a month. And $900 a month right now is huge. So yes, and Heather, why don't you throw it into the feed what their current interest rate is right now and what the new interest rate is that they are going to take, because I do want people to hear this. There is opportunity for you guys to be saving. You're just so dead set on my interest rate is 3%. I can't get rid of that. But you're not realizing that your credit cards are at 25, 30, 35, even 40% right now. Your student loans, your personal loans, everything that you have outstanding, that debt you've accumulated is so much bigger that even if your mortgage rate goes up, you're still saving yourself and you're giving yourself some breathing room. Giselle says, thank you. That's very helpful. And then she says, I'm based in California. I would love to. Giselle, call us. We would love to work with you. And if you're another real estate agent out there that watches us, listens, if you guys are hearing us on the radio on Saturday, we would love to work with all of you. Just because we're on the radio, we are not too big for our britches. I'm going to be honest with you. It's kind of a stalemate right now, right? There is not a lot of action. Now, I've been doing this for so long that I have repeat clients, and I do still have business that's coming through and keeping us moving, right? But it's absolutely not crazy times. We're not, up to our ears in clients that we can't service people, we can't take care of them, and we can't take on new real estate agents. So we would love to work with you. My team is excellent. Everybody that works for me, all of the ladies on the team have been doing this for just as long as I have. And, we're going to take care of your clients. That's just what we do, and it's important to us. So thank you, Giselle, for bringing that up. It gave me a good chance to actually pitch our team and have people call us. So with that said, I hope that I drove it home. If you've got debt, you're a homeowner, call us and find out. Let us run the numbers. Let us see if we could save you some money. Let's see if we can try to let you breathe a little bit better. If you've been thinking about buying a home, I say it week after week after week after week, but seriously, come on now. You guys, get off the fence, get yourself pre-approved, and try to get yourself into a home. It's the best thing that you can do to fight any kind of inflation, have stability, know that it's yours, know that you don't have to move. It's a great stepping stone. It's a great place to start. Rent it out and go buy another one when interest rates drop, refinance it, make the payment better, and make some cash flow from your rental, and then go buy yourself another property. It's really, really great time to do that. So Heather said, current interest rate is at 4%, and they are paying off all debt, including personal loans, and still saving the $900, huge for their family. And Heather, what's the new interest rate that they're getting with that refinance? So they're going from 4% to what percent? And then Giselle gave me the hands up. Yay! Thank you so much, Giselle. And then Heather said, we discussed a HELOC, but total refi of the loan and cash out was so much better. So we're going to wait for Heather to just quickly tell us what the new interest rate is. They're going on a current mortgage of 4%, paying off all of their debt, their personal loans, everything. And they're getting into a new refinance. They're saving $900 a month. And Heather, what's that new interest rate so we can end the show? Come on now. Give it to us. I do believe that let's see if she answers. I'm going to call her. Out right now. Let's see. We're going to call her right now.
Hello.
Hi, you're on air.
Hi, how are you?
I'm good. So you didn't answer my question. They're going from a 4% rate to what percentage?
I was just typing it in. They're actually going to about a 7% rate. They do need to work on a little bit of their credit. So their credit's not as good as they would like it. So they got a little bit higher rate, but it's still totally beneficial to them and helping them out 150%.
I love it. Well, thank you for answering the phone and not ignoring me since I'm in
Absolutely.
studio.
No worries. Anytime.
All right. So thank you so much. I appreciate it. We're going to end the show now.
Have a good one. Bye, everyone.
Thank you. All right. So there you go. There you have it. You heard from her. So they are going to an interest rate of 7% from 4%, paying off all their debt, all their bills, all their everything, and still saving themselves $900 a month. So if you guys want to reach out to us, we cannot encourage you more to do so. We are here to help you. You can reach us at 844-935-3634. That's 844 we lend for you. WELEND and the number 4. If you want to know when I go live every Wednesday, you've got to text the word mom to that same phone number, and it is just mom. No parentheses, no opt me in, just MOM. Text the same phone number and you will get a text message once a week with the link to join. Once again, that's 844-935-3634. I hope you guys have a fabulous one, and I'll be back again next Wednesday. Talk to y'all real soon. Bye-bye.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, have you been thinking about doing some home improvements or renovations to your home? Well, property values are up and interest rates are down. Why not explore whether that's something that you can do? How do you do that? Well, get on the books. Get a phone consultation with us. What do? Go to mortgagemomradio.com and book your appointment right there. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call mom. She's a mortgage mom.
Hi, this is Debbie Marcoux, the Mortgage Mom. Did you know that interest rates are down and home prices are up? Well, this is a great time to consolidate that first mortgage that you have with that home equity line of credit or second mortgage that you might have outstanding. If you want to know more, you want to know what that might look like, you want to know what those payments might be, what kind of interest rate can we get you? Well, give us a call. You can reach us at 844-935-3634. Or hey, go to our website, mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho MLO 208-023-7926, Illinois 031-005-8339, Missouri, North Carolina I-210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho MLO 208-0237926, Illinois 031.0058339, Missouri, North Carolina I-210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.